Welcome back to Street Times. Here's a quick recap of your top stories at this hour. Shares of Alibaba selling off in Hong Kong, the e-commerce giant in a crisis mode as it grapples with an employee's allegations of sexual assault. Food delivery company Meituan Dianping very much doing well today, up 5.5% as investors shrug off a Wall Street Journal report that it could face a big fine for its anti-competitive practices. Plus, China's chip makers slumping on fears of Beijing's crackdown, pushing the CSI all-share semiconductor index down over 5% earlier this morning. Shifting our focus to India now. Utility giant Tata Power reporting a 74% jump in Q1 profits thanks to strong performance across its businesses and a reduction in finance costs. Revenues also climbing nearly 50% from a year ago following its acquisition of distribution companies in the state of Odisha. Tata Power's renewable business also picking up pace. The company now expects to grow its clean energy capacity to 80% by 2030 from the current 31%. India's power consumption has rebounded to pre-pandemic levels last month as more economic activities resumed following the devastating second wave of COVID-19. Tata Power's stock doing very well, up 75% year to date. And I have just the person to comment on the business and the earnings. Praveer Sinha is CEO and Managing Director at Tata Power, joining us live from Mumbai with his thoughts on how the business is shaping up and the outlook thereof. So it's great to have you in the show. Thank you very much for your time, Mr. Sinha. I don't want to start off there. The good results that we've seen in this particular quarter, is the run rate only likely to look stronger going forward, given what you've done with finance costs, as also the pickup in EPC contracts? Could you give us more on that?
Thank you for having me on the show. What you have seen is a very consistent performance of Tata Power. In fact, this is the seventh consecutive quarter where we have shown a performance improvement compared to the previous similar quarter. So I think what we are seeing is in Tata Power, many of the new initiatives that we took, whether it was relating to EPC or scaling up capacity for utility scale renewable projects, rooftop solar pumps, all of them have done exceedingly well. Similarly, we took over all the 4 distribution companies in Odisha. That has now added to our top line. Our revenues have gone up to nearly 10,000 crores, nearly 50% more than the same quarter last year. And also our EBITDA and PAT has gone up. So it will only improve going forward because many of the initiatives that we have taken were to a large extent also impacted in the last quarter because we had the COVID wave 2 in April and May. And also we had 2 cyclones, one on the western coast and one on the east coast. And both of them impacted our operations very badly. Notwithstanding that, the company has shown a tremendous performance in this quarter. And hopefully, once the impact of COVID is less in this quarter and subsequent quarters, we'll be doing much, much better than what we have done.
What about the risk of a third wave, sir? Potentially? Have you factored that in?
We expect that with more and more people getting vaccinated, the risk will go down to a large extent. What we have seen in last 8 weeks is the number of cases have come down drastically, and the R factor, which typically measures the number of people getting impacted, has come down to nearly less than 1. And we at present are not seeing any signs of the third wave happening until unless there is a new variant of the COVID. But otherwise, we really don't expect any third wave to come. Of course, people are taking precaution, having seen that after third wave, there were certain cases where people were not careful. And we have the second wave. So I don't think there is really a third wave of the extent that we saw the second wave.
So you're talking about, I have to focus on clean energy because that's really top of mind, especially when it comes to a traditional energy generator such as yourself, such as Tata Power. You're talking about achieving 80% clean energy capacity by 2030 from the current 31%. Would you say this is ambitious or realistic, given the underlying macro environment in India? And what is the biggest challenge to this outlook, to this target?
So I think this is the ambitious target that we have set for ourselves. And we strongly believe that we need to develop the thought leadership on renewable energy, and our action should speak for that. And that's why now we have taken a very, very ambitious target. And we said Tata Power has been in the forefront right from the beginning, more than 100 years back for when we started the hydro plants and we promoted clean energy. So similarly, looking forward, we are looking that clean energy will become the normal thing going forward. Having said that, I think there are a lot of structural changes that are taking place in the power sector in the country. The biggest structural change is the amendment to the Electricity Act, which de-licenses the distribution. What it means is that more and more private players will come in distribution, and the distribution sector, which traditionally has been in financial stress, that will hopefully be a thing of the past once the sector is opened up. So we are very confident that going forward, the changes that are proposed and also other changes in terms of making the tariff cost reflective and making the whole power sector commercially viable, those will propel the type of investments and type of growth plans that we have.
Right, so you're investing a lot in EV charging infrastructure, and you've tied up with HPCL. I believe you have already set up charging stations, EV charging stations in 40 cities. What's the target here? I mean, where do you want to get to, and by when?
So we are actually now in 112 cities. And we do expect that we will take it to more than 200 cities, and not only cities, but also highways, because the fear is that if you are doing intercity travel, whether you will have enough infrastructure for charging your vehicle when you are traveling from one city to another. So large number of highway charging facilities will be created along with HPCL and the various other partners that we have. We do have a ambitious target that we'll set up nearly 100,000 chargers by 2030. So we are really looking at ramping up. While we did something like 600 in last financial year, this year we are targeting to complete nearly 3,000 EV chargers. And these are public chargers. These are not the home chargers. Home chargers, we are already nearly at 4,000. And that will ramp up much faster.
So, I'm running out of time, but I'll quickly slip in two questions rolled in one. One is on Tesla. You've refuted talks of a tie-up with the company, but where do things stand right now? Is there a possibility in the future? And secondly, being a traditional power generator, where does this leave, as you make this transition to clean energy, where does that leave the future for coal-based power generation in India? Because if coal goes, jobs go in India. It's economically sensitive.
Yeah, so on Tesla and very many other OEMs, we are in touch with all of them. In fact, we've tied up not only with Tata Motors, but all the other EV players who are there in this country. Apart from that, whoever is planning to come in India in a big way in EV, for them, Tata Power is a great partner, and we are looking to collaborate and work closely with all of them. The second is on the coal. I think over a period of time, new coal plants will not come up. And the existing one, once they complete their useful life, they will get decommissioned. This will take another 20, 25 years. It's not going to close immediately. But yes, the transitioning will happen to clean energy. And based on the various studies, we find that the number of employment opportunities in the renewable energy is much higher than what we see is in the coal industry. So I think it's a question of how you retrain them and redeploy them in the new sector, in the new businesses. And this type of things always happens when there is a transformation in the business. I remember in the late 80s and 90s, when the computer came, people said that they will lose the jobs. But I don't think anything like that will happen. And going forward, we will definitely have a lot of opportunities in the renewable area where a large number of people will get employed and will get opportunities to work there.
And that's very heartening to hear, sir, because it's typically the bottom end of the pyramid that gets hit the hardest when a industry transition like this happens. Thank you very much, Mr. Sinha, for joining us with those great insights about your business. And just ahead, we have another big interview lined up for you, this time with Suncorp CEO Steve Johnston. Hear what he has to say about the company's latest earnings and the share buyback program next.